Hi, this is Jay from Quantum Flow, and it's Monday, April 15th, 2024. Please be sure to like and subscribe to our YouTube channel at QuantumFlobyJTNC to receive daily market recaps. Today, SPY gapped up over $5 at the opening, rallying strong in the overnight session, reaching a high of $5.1533 right at the open. But the rally was short-lived as fears of a broader conflict between Israel and Iran took over the markets around 10 a.m., and the market dropped hard to a low of 503.58, closing just above the low of the day at 504.45. This type of price action unfolded last Friday with a rally first, then a drop on global macro fears. The market found a bit of support at 510, but failed to hold and gave up over 1.25% on the day. We have been saying for some time that any breaks of 515 should be sold, and if 510 failed to hold, 504 would be next up as a major line in the sand for the bulls. We believed, and still do, that should 504 or precisely 503.50 fail to hold, our model will no longer be bullish, and we expect to see much lower prices in the near term. Price broke the lower trend channel, so it has been redrawn and is expanding, indicating further downside weakness. Treasuries, take a look, jumped significantly, 1.77%, closing at 4.61, reinforcing the flight to safety we've seen when the market falls. We continue to believe yields will reach 5% before finding any material resistance. Crude closed up slightly, while gold also moved higher by 1.66%. We continue to reiterate that gold will make new highs in short order. Bitcoin continued to stay under pressure, falling 3.4%, continuing the theme of risk off. While Bitcoin is still quite bullish, a break and close below 61,000 will bring in 53,000 quite quickly. Volume for SPY was over 92 million shares as traders continued to lighten their positions and moved into bonds. The fear of a major conflict in the Middle East is real, and the market is adjusting to this new dynamic very quickly. In Friday's video, we stated the bulls would remain under pressure and that we expected to see prices as low as 504 before the market found any material support. We also suggested the market needed to put in a few closes above 515 and then 518 in order to resume the bull trend. We stated we are fading every rally below 518. We suggested for today, the market would likely rally initially to 515 and fail. And once again, the market did precisely what we suggested, moving first to 516 right at the open before collapsing, with price now below the 50-day moving average. Should 504 fail to hold, again, price will quickly find its way to 492. Once again, the Quantum Flow model provided levels and action plan for today's trading. With the risk of war and the market at a major support level, where we go in the short term is anyone's guess. Wars are not incorporated into any model we know of, so relying on historical data points to draw conclusions is pretty much a fool's errand. But given how severe the sell-offs have been the last 8 days, we expect prices to continue to move a bit lower, but short of an attack on Iran by Israel, the market should recover and work to recapture 510. We do not believe 504 will give way easily without some external catalyst. As such, we still remain bullish above 504 and look for the bulls to get back above the 50-day moving average at 510. But we believe the pressure will continue and prices will eventually punch through the 504 level. Tim posted in the pre-market at 917. He thought with the market at 515 pre-market, it would struggle to get above 516 and most likely slide to as low as 511. The market did initially touch Tim's upper level before it decided to move lower on news of Middle East war. Looking at the 5-minute chart with QuantumFlow's market model indicator at the open, Price was ordered high and low by orange support and resistance levels. This implies the way to trade is to fade the upper level to at least the lower level. And if the lower level fails to hold, trading it to the olive targets. This trade quickly worked out, moving from 516 to 509 in the morning session. And the support and resistance levels redrew themselves in light of the market sell-off. With price currently trading below the lower orange support level, our quantum flow model indicates and implies there is further weakness to perhaps as low as 500. This quantum flow indicator is quite good at providing levels of support and resistance in real time with a directional bias. And if anyone is interested in learning more, please contact us at info@jtncgroup.com. So for Tuesday, we expect more weakness overnight, but an attempt to put in at least a dead cat bounce to perhaps 510. But any bounce will likely be short-lived and the market will move lower toward 500. Should Israel make a public statement that it will not escalate tensions further, the market will rally to at least 515. But again, until the market gets and closes above 515, our model will be fading any rallies. Quantum Flow projects SPY's range for Tuesday to be 497 to 513, expanding quite a bit on the increased volatility that the market has seen in the last several days, implying more trending and volatile price action for Tuesday. Today has quite a few earnings announcements pre-market, which could also give the market reason to cheer or to drop further. We suggest you trade what you see and keep an eye on the geopolitical risks as well as the earnings releases. Quantum Flow took a stab at a mean reversion trade for tomorrow, buying the 505 calls, looking for a pop to around 508, perhaps 509. If we see this type of result overnight, this should generate a fairly good profit. Mean reversion trades are by their very nature no better than 40% successful. So we always suggest when trading counter trend to trade light and small and be wary that this is a low probability trade. Dealer positioning for Tuesday to the upside has dealers buying 509, let's see where they are, 505 to 510 calls in very large size, while selling in much smaller size, 511 to 522 calls and higher, indicating a market looking to at least put in a short-term bounce on Tuesday. But again, any bounce will sell at far lower levels than are needed for the bull trend to reemerge. To the downside, dealers are buying 503 to 500, puts in about a 0.7 to 1 ratio to the calls they are buying, showing a little less concern to the downside and more likely a rally on Tuesday. The downside from the market makers does appear limited to around 500, while the upside could rally to 510 on Tuesday. Looking up to Friday, let's take a look. Dealers are buying 504 all the way to 519 calls in some size, while also selling 525 and higher strike calls. To the downside, dealers are still heavily positioned for downside risk, buying 503 to 490, 485 and lower strike puts, and about a 3 to 1 ratio to the calls they are buying. While they have lightened up a bit on downside protection, they are still positioned with far more to gain from a market sell-off than any rally. This certainly implies lower prices this week. And again, it continues to suggest fading any rallies to 510 and even up to 515, as the market likely moves still lower later this week. But field positioning does change, especially with the potential for war. So please be sure to check in with Tim during Quantum Flow's pre-market analysis, and also watch these post-market recaps to understand how deal positioning will affect the day's price action. Tim posts his analysis in the pre-market by 9 a.m., and we provide these market video recaps every evening. At Quantum Flow, we strive to deliver actionable intelligence you can use in your day's trading. Good luck and good trading.